Welcome back to the Dividend Diplomats YouTube channel, everybody. You know us by now, the Dividend Diplomats, Lanny, Bert. Let's go, team. We have a July 4th weekend edition of 3 undervalued dividend stocks that I'll be watching.
Guys, let's jump in, smash the heck out of that subscribe button, push this channel over to 14,000 subscribers. Let's go. Let's bring it. Let's ring in the new month, 4th of July, Independence Day in style with 14,000 subscribers as we continue to give you all the dividend investing content you need.
So the stock market finished the week at 38.25, up from the lowest points in the middle of June, which were around 36.50, 36.60. It was in that range. So it's had a nice little pop since then. Overall, though, stock market has been hammered in the first half of 2022. Lanny, it started out above 4,800, didn't it?
Started out, now it's down about 1,000 points. Obviously in bear market right now. And, I know come the end of July, we'll find out if we're officially in a recession once they come out with the Q2 figures to see if we have negative growth in Q2. I wouldn't really hang on the edge of your seat for that one because more than likely they're going to ring that recession bell, but we'll have to see it.
They're going to say, shocker, you've been in one already. You just haven't, you haven't put the label on it, but with inflation, jobs cutting, technology, fintech companies are laying off people. You're seeing a lot of unfortunate stuff happening. Gas still remains high, although it came down a little bit. You're seeing food inflation. It's just tough time. So yeah, it would not shock me if they told us, hey, you were already in that recession. You just didn't realize it until we now put that label on it.
And not to mention, obviously, the crypto winter that's having the impact on the broader economy as well, impacting the stock market on top of it all. So, but Bert, you did put together a nice watch list here.
Yeah, and that's why when there's all this noise going on, we focus on those undervalued dividend stock that have paid their dividends through good times and bad, and even grown them for the long haul. We're long-term investors, so we don't think about the short-term headwinds. We think about that long-term prospects. And you're right, Lanny, 3 stocks. I actually own all 3 of these stocks already. It'll be interesting to keep adding to these positions and growing them. They're not the largest positions in my portfolio, as you'll see when I talk about each one of the companies. So it's always great when you can buy something that is already in your portfolio that you don't need to add into your spreadsheet. You don't need to do new research on. You've already done it in the past.
I am either at, better valuations. It doesn't get better than that. Before we buy stocks and, before they come to our stock watch list, we focus on the 3 diplomat stock metrics: the price to earnings less than the S&P 500, the payout ratio below 60%, dividend growth, a history of growing that dividend at hopefully a higher rate than the rate of inflation. And then we toss in there that dividend yield as that bonus metric. So Bert, these 3 stocks, 3 different industries, you already own them in your dividend stock portfolio. You and I both have been putting a lot of capital to work, because when the stock market goes down, it's like a dividend investor's dream, because you're able to buy more income for less. And Bert, these are 3 stocks, 2 in particular, that really have taken a couple punches to the gut over the last, 6 months.
Yep. So let's jump right into this first one. Lanny, this one should be near and dear to your heart. You're the one that kind of brought this on in the community radar over the last few years. You've been adding for a while. I started adding at the beginning of 2022. That company is Cummins, ticker symbol CMI. Historically, I've always used a benchmark for Cummins with me adding in there. Whenever it's yielding at 3%, that's when I usually buy another share or 2 or 3 of Cummins. So far, I own not 1, not 2, not 3, not 4, but 5.028 shares of Cummins. Thank you, Drip. That's why you drip. You get that extra 0.028 shares. And my market value currently for my Cummins position is $975. So hopefully, as you can see, it's not the largest position in my portfolio. That's why I'm looking to add. And you know what? These metrics, Lanny, are looking like this might be a pretty good time to keep adding another share, 2 or 3.
They look really nice. To jump in, Cummins is trading at $194.11. Analysts are expecting a whopping $17.59. So you already know it's going to be around that 10 to 12 mark by just doing the simple math but that price to earnings ratio is only 11 times earnings, which is way below the S&P 500, which is around 19 to 20 times earnings. So definitely showing those signs of undervaluation. Again, you know that I already like this stock, Bert.
Yep, their current dividend payout ratio, considering at the moment their dividend of $5.80, which spoiler we'll get into here in a second, talking about that dividend. Current dividend 580, divide that by the EPS as a payout ratio that's very low, 32.97%. Plenty of room to keep growing that dividend.
Keep growing that dividend. Why? Because they do have a strong history talking about that third metric of growing that dividend. That's what you want as an investor buying these assets. You want a growing income stream. You don't want your rates to be slashed like you've seen in the economy with your savings account. You want that growing income stream. And Cummins has been doing it, Bert, for 16 plus years at an average rate of over 7%.
And what's that, Lanny? What month does Cummins increase that dividend?
You tell me, Chico.
July. This month, we're going to get a dividend increase announcement from Cummins here. So we're going to see what they are doing with that annual dividend here. Last year, they increased that quarterly dividend from 1.35 to 1.45. Is another 10-cent dividend increase in the horizon? We'll find out in the middle of the month. So keep your eye out in the middle of July. We'll know about Cummins.
Guys, smash that like button. Leave us a comment what you think Cummins is about to increase that dividend by this month. I'm obviously pumped up, and Bert, what a way. I mean, with one of the big 8 dividend increases that can happen this month.
Yep.
To get into that bonus metric, that dividend yield, like Bert said, he's been buying shares when they reach 3%. They're at 2.99%. So right there at that threshold.
Yep. And Cummins was below its current price earlier in this last week. So I did grab one more share of the company because I said Cummins at 3%. That's when I'm screaming time for me personally to buy. Let's summarize the metrics here. PE ratio 11.04, payout ratio 32.97, 5-year dividend growth rate 7.27%. They've increased for 16 years, about to be 17 here in July 2022. The yield of 2.99%.
Solid stock. Obviously, you've got the green check mark for me. You don't even have to ask. But Bert, dive into this next dividend stock, this second dividend stock, because you've been buying this stock and you've been telling me this is a great stock to buy now because it's obviously in your favorite industry. So let me hear your thoughts on this.
Everyone, Lanny and I love banking, and this is a great time to buy some bank stocks. Banks are having a rough 2022 for obvious reasons. They're a sector that drives it. They're dealing with higher interest rates, fluctuating demand for their loan products, with mortgages obviously slowing down as rates continue to rise. Other products too, especially on top of it, you might have a recession coming, which we talked about earlier, which lends itself to people being a little more conservative. So this is a good time to pick up some potentially undervalued banks. This bank that I've been watching in particular isn't a small community bank. It's a pretty moderate size. I say it's a large community bank, Lanny, based, headquartered in Pennsylvania, but serving a lot of the East Coast. That bank is Fulton Bank, ticker symbol FULT.
Volt, FULT. You gotta love it. 26 billion plus in assets. Again, a growing large regional bank here. And we'll have to look at the price to book ratio as we compare that and the price to earnings metric.
So let's just jump right in, Lanny, to the metrics. So that is, I think, a perfect segue if you are going to ask for one. Price to earnings ratio. Their current price is $14.59, earnings per share at $1.55, PE ratio 9.41. But as you perfectly mentioned here, banks, you need to look at that price to book ratio. Lanny, what do we typically like to see when we're evaluating the price to book for banks?
Yeah, of course. So guys and ladies in the investing community, when we're looking at bank stocks, the price to book, share price, essentially over your book, your value, or your equity, you're seeing what they're trading as a multiple to that. You want to see somewhere around 1, maybe less than 1.2 to show a little bit of undervaluation. Preferably, I think stubborn as Bert and I both are, we like to see 1 or less. Fulton is at less than 1 at 0.99 times book.
Yeah, so that's really what jumped and caught my attention here for Fulton, along with some of the other metrics that we're going to talk about. So again, their PE ratio is lower than Cummins, lower than the market, and their price to book hits that check mark of below 1 that Landy and I love to see. Let's look at that payout ratio here. Their annual dividend is 60 cents. Divide that by the 155. That gives you a payout ratio of 38.71%.
Plenty of room to, say your dividend safe, growing that dividend, because guys, that's what Fulton's been doing. Oh my gosh. An average rate of a dividend growth at 8.53%, staying in line, obviously, with inflation, but historically beating inflation and doing it for over 8+ years. Let's go, FULT. That's so solid. But Brett, I think the best part right now is to complement to that growth rate with the dividend yield. What does this yield look like?
Yeah, Landy, there's going to be a little cherry on top I'm going to surprise you with at the end after I talk about the yield. So when you look at their dividend here, at current dividend 60 cents, divide that by the 14.59, their current yield is 4.11%.
Well above the S&P 500, almost 3x the S&P 500. Definitely a lot of bang for your buck. Sometimes boring banks are some of the best investments you can make. So guys, if you want a good passive income stream, Fulton could be that one.
Lanny, you want to hear what the surprise is for this one with Fulton?
I'm assuming a special dividend, but let me hear it.
Yeah, that's the yield on their regular dividend. At the end of the year, they always throw in a nice little special dividend here. So they've increased their dividend every year. They just increased it by 1 penny here in March. But then last November, they announced and paid out an 8-cent dividend. The year before that, in 2020, a 4-cent dividend. Year before that, 4 cents, 4 cents, 3 cents. So they always pay a nice little special dividend on there just to, give you a little dessert there for your full entree of dividend.
A little pickle on the burger,
Yeah.
It's a little extra something.
Yeah. So to summarize, P ratio 9.41, price to book 0.99, payout ratio 38%, 5-year DGR 8.53, 8 years increase in that dividend, 4.11% yield, and on top of that doesn't include their little special dividend they pay you at the end.
I can see why you've been buying this stock. For how many shares are you up to already on
We
this
own
stock?
40 shares. So our market value is at 671.
Get
Obviously,
that to 1,000.
Yeah. Let's start with 100. That's probably where I'm going to work my way towards with Fulton. Take some time to get there. But what I do like about them is they pay a dividend in the first month of the quarter. So it's helping me get some income in a month where I don't have a lot right now. So the X date, I caught part of my purchases before their X date of June 30th. So I'm going to get a nice little dividend here in July shortly from them.
Congrats, guys. There it is, FULT. Sliding into the technology / physical hardware in the tech sector. Bert, you've been buying this stock over the last few years, and it finally really came back storming in on your stock radar. And I think this is a great way to get into that industry as a dividend growth investor. I don't own this stock, but I'm pretty happy and pumped up that you do. You want to introduce this stock right here?
Qualcomm, ticker symbol QCOM. Yeah, you're right, Lanny. I currently own 8.074 shares of Qualcomm. Our market value is at 997. So it's not too bad of a position. It's at a pretty good spot, but I'd like to keep adding more right now, at least get to, I don't know, between $1,500 and $2,000 here for this company. But yeah, I've been adding some more tech companies. I've been buying a lot of the larger tech companies here. Intel obviously is one that we've bought recently in the past. Historically, I've also added IBM, Cisco. Now I've been adding Qualcomm. So yeah, a lot of these legacy tech companies, Lanny, seem to find a way into my portfolio.
Obviously, Qualcomm dominates a lot of industries. When you think of their chips, I think, Samsung obviously is a big user of Qualcomm. So again, they have a lot of large companies that rely on Qualcomm to build a lot of devices. So Qualcomm has got a nice cash flowing business.
And look, this year they're down 33% year to date. So this to me is the time. We all know how hot tech was in the past. It's clearly not. Tech's going through some pains right now, but this is the time to add some of the
no pain, no gain, though, Bert.
No, you're right though, but this is the time for me to add some of these positions that I hadn't historically in the past at higher multiples, take advantage of it now and get paid a nice yield along the way while we're waiting. Let me jump into the screener here, Lanny, if you're fine with that.
Let's go. Hit him with the left.
All right, price 123.53, EPS 123, or sorry, EPS 12.53, PE ratio 9.86. That's hilarious. Didn't catch that one when I was doing the research, but how funny is that?
It's hysterical, but almost as funny as this low dividend payout ratio as the second metric. Their payout ratio right now is at 23.94% because they paid $3 in a dividend over the course of a year. So you take that over that $12.53. So wow, below 25 freaking percent for Qualcomm.
5-year dividend growth rate is 5.28%. They've increased that dividend for 11 years. And in April, they announced a dividend increase that was close to 10%. They increased that quarterly dividend from 68 cents to 75 cents.
They better bring that dividend growth rate up a little bit higher for Qualcomm.
Yeah.
They have plenty of room. They make a ton of money. And you'll see why, because that dividend yield right now is 2.43%. So you really do want a little bit higher of a growth rate to go with that. On not a low dividend yield by any means, but on the lower side.
I'd say it's in the average, just right where you'd want it to be.
You bet 250 in MLB, you're average.
Yeah, well, in this MLB, you might make 150 million at that rate with what if you're hitting there. Swing for the fences.
Just keep swinging. All right, guys.
So
on
a baseball note here, I saw the craziest stat line. Some guy was hitting 220, 20 home runs, and 33 RBIs at the time of the game. Dude, it's a lot of solo home runs, and he just got $100 million plus contract. It was one of the craziest things I've ever seen. But
show me the money, do the shame math.
Yeah. All right.
Summarize Qualcomm under a 10 PE ratio, 23% dividend payout ratio, dividend growth for over double digits, 11 plus years at an average rate of 5% with the yield closing in on 2.5%.
So there they are, the three companies of my watch list here: Cummins, Fulton, and Qualcomm. I'm not going to read them individually. You'll see the chart here with the three companies up on the screen right now. If I had to rank them, I'm going to go 1A, 1B, 1C. I like all three of these companies. I'm not ranking one of the, I think they're all great. I would have no problem buying any of them this week and adding to my positions. We'll see where the market shakes out, what happens when it opens up on July 5th. But yeah, I'd have no problem sprinkling one of Qualcomm, one of CMI, and then a little bit more of Fulton, maybe 10 more from there. That wouldn't be a bad week for me.
Guys, what's your favorite dividend stock to buy on this list of three from Bert? Let us know in the comments. Obviously, if you haven't already, smash the heck out of that thumbs up. Get this channel to well over 14,000 by the end of this July 4th holiday weekend. We appreciate the love and support. Bert, any other parting words, my man?
Nope. Let's go. I think it's time, Lanny, for you to send these diplomaniacs off.
You got that right, brother. So that was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.